McGraw-Hill Audio presents The Successful Investor, What 80 Million People Need to Know to Invest Profitably and Avoid Big Losses. Written by William J. O'Neill. Read by Alan Sklar. Introduction. Why this book now? If you're a stock or mutual fund investor, you probably already know the answer. Chances are you're one of the 80 million Americans who lost 50 to 80% of your hard-earned life savings in the market decline that began in the spring of 2000. And you never, ever want that to happen again. But unless you make it a point to learn what happened to you, what went wrong, and why, there's no guarantee that history won't repeat itself. The purpose of this audiobook is to help you see some of the mistakes you made, and could make again, unless you adopt sound rules and principles to guide your future investment decisions. Only then will you be on the road to the kind of investment results that can and will materially improve your life. And if you're a new investor, you certainly want to learn what not to do, as well as what to do to become a successful investor. But, you say, wasn't the recent market debacle a once-in-a-lifetime event? Well, yes and no. The market bubble that formed in the anything-goes 1990s and blew up in the early 2000s was unusual. We hadn't seen anything like it in 70 years. But it was different only in degree. If measured by the NASDAQ, home to most of the high-tech stocks that got so inflated, the 1990s market went up even more than the superheated bull run of the Roaring '20s. And the losses that followed rivaled those suffered in the crash of 1929 that led to the Great Depression. The wild market of the 1990s can even be equated with the tulip bulb mania of 1636. Everyone then believed the whole world would have to buy tulip bulbs from Holland. As a result, prices of bulbs traded on the Dutch Stock Exchange reached astronomical heights before they came crashing down to earth. It was much the same with the Internet craze of the 1990s, when investors had to own a piece of every company with .com attached to its name. Otherwise, the latest market cycle was much like all those that preceded it. I know. I've been in the market day in and day out through every bull and bear cycle for the last 45 years, both as an individual investor and as an advisor to many of the best investment managers in the country. Moreover, as the head of a top database research firm, I've also conducted one of the most definitive studies ever done of the market and the stocks that always lead it. What impresses me most, even after going through a period like 1998 to 2002, is how little things change. The losses suffered in the most recent decline may have been extraordinary, but the mistakes that led to them were not. They were the same mistakes investors have made in every cycle. When you think about it, the reason for this becomes obvious. The market is made up of millions of people acting almost 100% on human emotion and personal opinion. It is crowd psychology on daily display, and especially when it comes to the hopes and fears and pride and ego that drive so many investment decisions. Human nature is pretty much the same now as it was in 1929 or 1636. What you must understand, though, is that highly successful investing has nothing to do with your emotions or personal opinions. The stock market doesn't care who we as individuals are, what we think, or how we feel. It's a beast like no other, indifferent to human desires, oblivious to common wisdom, maddeningly contrary, and seemingly bent on confounding the majority at every turn. The only law it obeys is the law of supply and demand. And until you, as an investor, come to grips with this reality and learn to move with the market rather than against it, you'll be plagued by results that are mediocre at best. This would be a shame, considering that Americans are taking more responsibility for their financial well-being. It won't be long, for example, until the Social Security system will be at least partially privatized. Then you'll be able to take some of the money that the government sets aside for your later years, and has invested for a pathetic return, and invest it yourself. Deferring to the market's
Sample complete. Ready to continue?